Alrighty, guys, here we go. This is a lecture summary for the chapter 11, the highlights of what compensation is and total rewards. Now, more and more now, we're looking at HR, of course, always been part of the compensation. But one of the things that we have to remember is that compensation is not just pay. It's all kinds of things, all kinds of different rewards that a employee can um, be expected to get. And some expectations are there. There's the expectancy theory about if I do a job well done, I should get paid, right? Of course, we learned in evaluation that we're going to determine how well that job is being done in last week's chapter. But the other thing that we're looking at here is as far as a reward, bonuses, merit pay. Um, some companies give gift cards for if they exceed sales. They give them other types of rewards instead of just giving them it on their salary, okay, or their base pay. Base pay. I can't say that word. I don't know why. So total rewards is again, as I stated, what you're going to get. Now, remember, we're also going to have to be dealing with our company as far as where we want to go, how we want to attract those new hires, and how we want to keep those that we have hired already through the total reward system and our strategic guide and the decisions that we make as far as what our compensation practices are going to be. Are we going to include merit pay? Are we going to include bonuses? Are we going to include um, other things such as um, holiday pay? Are we going to pay for overtime? Are we going to pay when we need to have things like that, like such as overtime in the health professions, especially when or anybody that calls in sick? What are we going to do? So we have to consider that, and of course, stay within the laws of pay in the United States. Um, there's 6 optimal compensation components. Of course, we have to look at, as I stated, how we're going to retain people, and again, how we're going to go ahead and work this so that we reach the goal of the company, profits, so we can then pay and retain our current employees. So typically, you see about 60% being direct or tangible. Direct and tangible are going to be those that's linked to pay, okay? Direct pay for hours or whether you're on salary. Indirect are going to be things such as bonuses, where you only get those every once in a while. Your book goes ahead and talks about that in on page. It talks about that on page 403, where you're talking about the amount of indirect, but they're relatable. Okay, so for a job well done, for the team that meets its deadline, they're going to go ahead and give them a bonus, well, whatever the case may be. Those are about 30% that are out there. Then you get the intangible, the 10%. Those are the ones that I was talking about in the intro about a job well done, how you feel for doing a job well done, for getting that pat on the back, for saying, hey, you did a good job. Those are intangible for the environment that you work in. Maybe they don't give you something directly related, or yes, maybe related to a reward. Maybe you get a new computer, which is directly related to the job that you're working with. Those type of things that we're talking about. So here we go. Base pay, variable pay, bonuses, indirect, medical insurance also, I forgot to mention that. Vacation, holidays, pension, they're still part of what you're going to be getting. Um, but it's tangible because you can still get, but they're indirect because they're not based on your salary. And then again, the challenging work and the positive reinforcement of intangible rewards as well. You're also looking at, again, all of these variable pay. Those are directly linked to individual or team or organizational performance. The reason it's called variable also is because of the fact that it will vary. You may not get the same amount across the board. It may be different depending on your specific evaluation. Your benefits, of course, are your membership to the organization, your Benefits would be your vacation pay, sick pay, your medical insurance, um, dental insurance, those type of things also that you get. Sometimes the employer pays for it, then you may contribute to it as far as your retirement. And the other thing also that based on some of the insurance, the employer may pay for you, but you may be allowed to go ahead and add your family members as a benefit to you, but of course it's taken out of your salary. These are the laws that go ahead and govern compensation. Your Fair Labor Standards Act, your FSLA. Minimum wage. Minimum wage is now what, 7.35, 7.45 per hour. Now there are companies that pay above that, but that means that that is the minimum wage that anybody can pay you. I don't know what you're thinking. Wait a minute. What about those that work at a restaurant? Okay, there is a limit to the amount that the employer still has to pay, but you're also going to go ahead and be getting tips as well, if that is the compensation package that the restaurant goes ahead or the service industry goes ahead and gives you. For example, car industry, they may give you a base pay, I say, others may just work on commission, whatever they sell. The same thing with being a realtor. Sometimes you will only get paid based on commission, how much you sell. And a portion of that is sold. There's child labor law provisions. Of course, you cannot be more than 16 when you go to work. I mean, not more than. You have to be more than 16 before you go to work. And remember also, if the restaurant sells alcohol, the person that is 16 can work there. They just have to make provisions that they're not working in the area that provides alcohol at all. Okay? Exempt and non-exempt. Those are the people that are working wage based on hour that they clock in and out. Those are non-exempt. The exempt are the ones that get paid a flat rate regardless of how many hours they work. And then, of course, you have your overtime pay. That's where you get paid time and a half for working over the 40 hours. And again, it's a primary federal law, which was enforced by the Wage and Hour Division of the U.S. Department of Labor. And it goes ahead and it covers what I just stated. It is the minimum wage is set by congressional action. There's again, as I said, the set minimum age for employment with unlimited hours at 16 years. You have to be very careful, again, for hazardous occupations. Some say that you cannot be you cannot work in this because of the hazard, and you have to be an adult. You can work outside of school hours, but there's still 14 to 15, but there's still limitations to that. I already went through non-exempt. Now again, look at this. Determining the status under FSLA. If you're an executive, administrative professional, computer, outside sales, including pharmaceutical sales, you can be exempt. Criteria for exempt status, okay, means your pay level per week minimum is $4.45 per week. Minimum, meaning you can work more than that. Your primary duties and responsibilities are going to have a lot of discretion and judgment. And of course, it depends on the advanced training and knowledge that you have. Overtime have been huge issues, always, okay? Because again, we're thinking, okay, what does this mean? Do I get travel time? What if it takes longer to travel? Do I have any time for training? Is that going to be included? Do I get docked for that? Yes or no? Especially if it's a mandatory training. Do I get time off? What happens when I get a inspection and I got to be there? What about after hours email? Does this mean that now I'm on the clock again? What happens? Those issues have to be dealt with in the organization and according to their policies as well. You also have to make sure that you've got the Paycheck Fairness Act, Equal Pay Act, the Lilly Ledbetter Fair Pay Act, and independent contractor regulations. When we're talking about equal pay of 1963, you're talking about making sure that there's no discrimination. If you do get the job, if you do the job, you get the pay. That's it. If you do it, it's very simple. It prohibits the company from using different wages for men and women. Lilly Ledbetter, the only difference there, it deals with the Fair Pay Act. But what it does, though, is it also says, hey, by the way, guess what? If he or she can prove that there's been discrimination, they have 300 days afterwards, or up to 300 days of the initial discrimination in order to say, hey, guess what? I haven't been treated fairly. Now, Lilly Ledbetter found this out after she was let go. And she found out, guess what? I was getting paid less than anybody else because I was a female. So guess what? They had to give her the compensation because of what they found. When we're talking about independent contractor and regulations here, we're getting into an area where we're talking about somebody being an independent person, an independent consultation, a person that's only going to work from contract to contract. Let's say that there's a project and it's only going to be for 6 months. Okay, so I'm going to work. It depends on whether or not that contract is going to, or that person that is hiring you is going to give you either your amount of pay with Social Security and all of the taxes taken out, or they're going to decide, guess what? I'm only going to go ahead and I'm only going to give you a 1099, which means you're, as an independent contractor, going to have to take care of making sure that whatever amount of money I give you, you have to determine how much to take out for your OSDI, for your FICA, for your FUTA, your unemployment tax, and for your if there's any state unemployment tax as well. You deal with it, not them. Yes, compensation is a lot of fun. Then the other thing also, of course, is when you're looking at this, is to identify the criteria for independent contractors. And the reason that there is a criteria is found on your book on page 412. Your book goes ahead and talks about where, when and where the work gets done, what tools and equipment they're going to use, financial control as far as the worker's investment, how the business is going to go ahead and pay its worker. And then it talks about the relationship. Do we have a written contract? The permanency of the relationship, how long is this relationship going to continue? So there are rules and regulations on how we're going to pay you, and therefore whether you meet the criteria of being an independent contractor or not. The other thing also is prevailing wage, which is an hourly formula based on rate as far as the job on different geographic areas. Again, for example, what I mean by that is this. Okay, you go to Austin, yes, you're going to get paid more. Well, most of the reason why is because guess what? There is a higher cost of living, right? But you are going to get paid more. There's also what is called garnishment. That's where a court order directs the employer to set aside so much money and to set it in for debt that it's owed, let's say, to a creditor or to because of what's it called? To read your book, it says a whole lot more about it. Okay, you have your assignments, you have your discussion, and you also have your unit exam for this week. And again, if you have any questions, don't hesitate to contact me, and I'll see you on the flip side.